Welcome back to the Daily Crypto Roundup. And today, the entire market has decided it's time to wake up. Bitcoin is ripping upward again. Ethereum has put in one of its sharpest daily climbs in weeks, and almost every major chart in the top 10 is pushing higher at the same time. There's a real energy behind the move today, and what's interesting is that when you look across all the major outlets, Decrypt, DL News, Finance Magnates, the Coin Republic, 99 Bitcoins, they're all describing different pieces of the same overall picture. So what we're going to do in this episode is bring it all together. Break down what's driving the price action. Explain why the sentiment has flipped so suddenly and give you the full context so you actually know what's happening behind the scenes. Before we jump in, a quick reminder as always, our weekly XRP giveaway is live. 10 XRP for the comment of the week and 5 for a random listener. Just leave a comment and drop a 5-star rating on the show to enter. And we are only 56 ratings away from dropping another 50 XRP as a special Christmas Eve giveaway. So if you haven't rated the show yet, please take a moment and do it now. We really want to give that bonus 50 XRP away before Christmas Eve, and it would be brilliant to hit that milestone with all of you. Now let's get into the numbers while the market is still buzzing. Bitcoin is sitting at $94,004. Ethereum is trading at $3,374. XRP is at $2.15. BNB is coming in at $919. Solana at $142. Tron at 28 cents. Dogecoin at 15 cents. Cardano at 48 cents. Bitcoin Cash at $581. And Chainlink at $14.82. Every one of those coins is green today. And what stands out is not just the price movement itself, but the fact that the entire top 10 is moving together. That almost never happens without a bigger catalyst behind it. And today, there are several. The biggest theme cutting through every major site is the anticipation around the Federal Reserve. This is the week the Fed meets again, and traders are positioning aggressively ahead of that decision. The mood across the board is that a rate cut is coming. And markets absolutely love the idea of cheaper borrowing and increased liquidity. DL News reported that traders expect the Fed to cut by 25 basis points, and they highlighted analysts from the London Crypto Club, who said openly that a continued rate-cutting cycle, combined with balance sheet expansion, could push Bitcoin sharply higher. It's not just a passing opinion, it's turning into a widely accepted narrative. Polymarket odds are indicating a very high likelihood of a cut. The CME FedWatch tool is pricing it in strongly, and every time the probability increases, risk-on assets respond instantly. A softer dollar, lower borrowing costs, and the psychological shift that comes when investors anticipate easier financial conditions all feed directly into crypto. And that's exactly what we're seeing today. Traders are stepping in before the announcement rather than waiting for confirmation. It's a classic pre-event rally. And you can feel that in the way the charts are moving. Sharp, decisive, confident. But the Fed isn't the only piece of the puzzle. According to Decrypt, a wave of short liquidations has played a huge role in the sudden surge. As Bitcoin climbed into the 90,000 region, a lot of traders who had placed bearish bets were caught out. And when a short position gets liquidated, the exchange forces the trader to buy back the asset at market price. That forced buying accelerates upward momentum, and when it happens at scale, you get exactly the kind of high-energy move we've seen today. Decrypt's report described it as a squeeze into the macro event, and that lines up perfectly with the structure on the charts. When bears get trapped right before a big announcement, volatility increases, and the bullish pressure becomes self-feeding. On top of that, we're coming off one of the most brutal November periods in recent memory. Finance magnates describe today's movement as the first meaningful relief bounce after the chaos, and that's probably the cleanest way to put it. Bitcoin dropped from the 120,000 range down into the 80s in a very short space of time. Fear spiked, sentiment hit the floor, retail backed away, and institutions temporarily stepped back to watch how the market digested the fall. When a market gets stretched that hard to the downside, the first sign of stability, combined with a major macro catalyst, triggers a strong rebound. Finance magnates aren't calling this a full trend reversal yet, but they are calling it the beginning of a healthier structural phase. And that alone brings sidelined capital back into the arena. The Coin Republic brought another interesting angle to the table by quoting research from Coinbase Institutional. They pointed out that global liquidity has been rising again after several months of tightening. Stablecoin flows onto exchanges have increased noticeably, suggesting traders are positioning capital to deploy. They also noted that Bitcoin had fallen more than 3 standard deviations below its 90-day trend at the beginning of December. And historically, when Bitcoin gets that stretch to the downside, the probability of a mean reversion bounce increases dramatically. Combine that with higher liquidity and a big macro event, and it's no surprise we're getting a move like this. We are going to take a quick break here for a word from our sponsors. Stay with us.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
Okay, welcome back. Let's get back to it. The liquidity story doesn't stop there. Stablecoin dominance has been shrinking slightly, meaning traders are rotating out of sitting on the sidelines and back into actual crypto positions. It's one of those subtle metrics that doesn't grab headlines, but tells you a lot about market intention. When people feel uncertain, stablecoin dominance rises because traders prefer to stay parked and wait. When people start leaning bullish, stablecoins get converted back into Bitcoin, Ethereum, and the rest. So this shift, even though it's small, is meaningful. Another layer worth mentioning is the ETF activity. Over the last few days, Bitcoin ETFs have seen some outflows, but what stands out is where that money is going. According to Crypto Deans, funds focused on Ethereum, Solana, and XRP have seen fresh inflows. That is really important because it tells us 2 things at the same time. First, capital is not leaving the asset class, it's rotating. And second, the rotation is moving deeper into the majors, which is exactly what you tend to see when investors still believe in the long-term outlook but want exposure outside of Bitcoin alone. When ETF flows start shifting like this, it often means institutions and larger retail players are looking for asymmetric opportunities. Bitcoin remains the benchmark, but when liquidity improves and macro conditions become more favorable, appetite naturally spreads into the next tier of assets. The fact that Ethereum, Solana, and XRP are seeing inflows while Bitcoin consolidates tells us the market is broadening, and that's a healthy sign. Another factor feeding into sentiment today is the ongoing discussion in Washington around the crypto market structure bill. Multiple outlets reported that Democrats and Republicans have had fresh discussions around the legislation, and while nothing is final yet, the simple fact that serious debate is happening at all is enough to improve investor confidence. After several years of regulatory uncertainty, the idea that crypto could soon have a clearer framework is a very big deal. And this isn't happening in isolation. The CFTC recently authorized Bitcoin as collateral in a regulated derivatives pilot. BlackRock filed for a staked Ethereum ETF. And institutions continue to push for ways to integrate digital assets into traditional financial systems. All of that builds a foundation beneath the price action we're seeing. There's also the elephant in the room, Michael Saylor buying more Bitcoin. Whenever Saylor buys, sentiment improves. It's not because his purchase size alone moves the market dramatically, although the numbers are still huge, but because it reinforces the message that long-term conviction among major players is not weakening. When other investors see a company like MicroStrategy continuing to accumulate, it creates a sense of directional confidence. And during uncertain periods like the one we've just come out of, confidence is often the missing ingredient that allows a bounce to turn into a trend. So when you line up all these forces, traders front-running the Fed, short squeezes kicking in, relief after a brutal November sell-off, improving global liquidity, stablecoin repositioning, institutional rotation into other major assets, renewed political movement in the United States, and high-profile buyers re-entering the picture, you start to see why today feels different. This isn't a single headline causing a spike. It's a whole ecosystem of events converging at the same time. And when that happens, crypto doesn't move slowly. It moves with force. What makes today's move interesting is that there isn't one overwhelmingly dominant story. Instead, the momentum is coming from the alignment of multiple medium-strength catalysts, all pointing in the same direction. Strong macro expectations, improved liquidity conditions, trading dynamics favoring the upside, and institutional behavior leaning back into the market. That combination is powerful. And because crypto is such a sentiment-driven asset class, the moment confidence returns even slightly, the market reacts disproportionately fast. As always, the question now is whether the momentum continues. Some analysts believe this rally could extend if the Federal Reserve does deliver a positive message. Others think the market could pull back slightly after the announcement before establishing a clearer trend. But what's unmistakable is that today's move is not random. It's part of a broader reaction to improving conditions after a difficult month. And that's exactly the kind of environment that sets up bigger moves heading into the final stretch of the year. Before we wrap up, another quick reminder. If you haven't left a rating yet, we are 56 ratings away from unlocking that special 50 XRP Christmas Eve giveaway. So take a moment after the episode and drop a 5-star rating if you haven't already. It makes a huge difference, and it helps us grow this community faster than you'd think. As always, thanks for listening, thanks for supporting the show, and thanks for helping us build something genuinely special here. And until tomorrow, we'll see you at the top.